Hi, this is Jack from Alpha Charts with a state of the market video. Today is March 6th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. I appreciate that. You can also find me on Twitter at AlphaCharts365, where I post daily my thoughts on the market, setups, and so on and so forth. All right, so starting with the SPX, is a rougher week in the market. As you can see, it is now definitively below the 23-day, which is now flattening and starting to turn downwards. Um, Overall, SPX is holding up better than some of than the Qs, which we'll see in a second. But again, underneath the 23-day is a little bit is absolutely concerning. We want to see this recover above it, quickly. Friday was pretty good, but again, after 3 down days, it's hard to take solace in just one day. Moving on to the Qs. Actually, let's look at the equal weight. See how that compares. Now you see the equal weight is holding up much, much better. So what does that tell you? It tells you that some of the really big names are getting hit hard, but under the surface, things are holding up okay. Looking at the Qs. So the Qs, making this bigger. Something I was talking about was this ABC pattern that was showing up, and it did play out so far. This area did hold. That's right, where we highlighted it. Is it done? Is this the bottom? I don't know the answer to that. It could be. We could chop sideways a little bit, or even flag out again and make another, and then thrust below it. Right? We don't know that's the bottom. It is constructive though that the AVWAP, average volume weighted average price, from the start of this uptrend held here, and then when it did pierce it, support was found around 297.50ish, 297.45. So that was very constructive. Also, this high volume day, it was that a capitulatory day. I don't know if it was capitulation or not, but it's definitely a huge volume, and the buyers did step in, which was nice to see. So if this level does break, which is definitely has to be one of our possibilities, where could the price potentially go? I am going to use this tool right here, which is a fib retracement tool. And let's see what it shows us. All right. So you see the 297.40 is the full measured move down from the top in the ABC move. And then other, what I would consider important fib levels, I think this 280.61 or 64, whatever it is, that's a potential support area. And it makes sense because you see there would be a volume shelf right here, most likely. Good volume in this area. And then a full measured move would be in this 270 area. Again, that would be the bottom of this area. So those are two potential downside targets if this area breaks. Now, I don't know that the area is going to break, and actually I'm hoping it doesn't. I'm hoping this was ABC move. We chop sideways for a little bit, and then the market, rebounds, makes a, something that looks like this. Maybe even, and there's another shakeout here. It could make another situation like this, right? That would be the more normal thing. Just going back to back in February, March. This is more abnormal. This would be more normal, in my opinion. That's more very emotional price action. This is more controlled price action. So we'll see. We don't know the answer to that, but right now this area is holding, and that's what we know. So manage risk accordingly, but that's constructive, even though the week was pretty rough on the growth names. And if anybody's holding any growth names, they pretty much got hit pretty hard. So that's the Qs. Now let's look at IWM. IWM still holding up pretty good. Looks very much like the SPY or SPX. Underneath the 23-day with a flattening to slightly declining 23-day EMA. So is what it is. Oh, going back to the QQQE, equal weight, as you can see, it looks very much like the Qs. So you know that everything's getting hit in the NASDAQ, right? Whereas when we looked at RSP, it was holding up very, very well. Um, and then if you also look at and when you look at the IWM, which is equal weight, also it's constructed as an equal weight index. Um, it's doing a little bit worse than the SPX, right? So right now, SPX is the strongest of the three major indexes. But yeah, so we're watching this nice candle. Buyers did step in pretty heavy. So we'll see if they can get it back above the 23-day EMA. I don't know if that's going to happen or not, but we'll be watching that next week for sure. Looking at the major index sectors, XLF, when you go to a weekly chart, you can see it has been and continues to be really, really, really strong. Here's the weekly chart on that, and that just is a beautiful breakout. And when you look at the financial services sector, it's the strongest of the bunch. These are the big banks. Big banks are doing really, really, really good. It may have something to do with the interest rates rising, right? Here's the 10-year yield. I mean, a lot of people are blaming the rise of the 10-year on the stock market correction, especially in the growth names. I don't think the rise in the 10-year is the reason per se by the number here. I think the rise in the 10-year and the velocity of the rise was what was important. I think this is what made people really nervous. And then let's be honest, 140 to 145 didn't hold, right? We're at 155 right now. Chances are yields are going to continue to go higher. If that does, I think growth names could continue to get hit pretty hard. But we don't know that. That's just speculation. Anyway, XLF, let's go back. XLF, really strong. That's good for the financial sector, good for the IWM, SPX. Not so good for the Qs because there's not many financials in the Qs. Going back to daily. Okay, looking at SMH. So SMH is a little bit more concerning. You saw that there's this nice uptrend line that we could easily put somewhere like that. And it's now broken this week, and it's now clearly starting to turn down the 23-day EMA. There was a nice hammer on Friday, but again, lower volume than the day before, and so I'm not convinced that SMH is ready to rebound yet. There's a lot of work to be done at this point, so it's not looking as good as some of the SPX and small cap. So I think that tech is still going to be under some pressure going forward. Now, if 239 gets retaken, I would change my story, right? But as of right now, it hasn't been. So that's what we know. Looking at lumber's holding up fine, right? I mean, really nice. So no concerns with lumber. Moving on, let's look at bond ratios. And we'll do that. And let's get rid of volume. All right. And then look at it. Give me a second. I'm sorry about that. Not TLT. It's HYG. I don't know what I was doing there. All right. So looking at my bond ratios. As of right now, there's no concern, in my opinion, about bond ratios or liquidity or anything like that. So that's a positive for the market, right? Bond ratios look absolutely fine. Looking at the VIX, VIX had some spikes, but as of right now, it's back. It's back in no man's land, right? Not quite, trending market, not quite spiking market. And I think that goes to show how, people are nervous, but not that nervous out there. Looking over at the put call ratio. Yep, it came up some, but again, nowhere near fear, which is what I would say this would look like, especially this one right here, right? That's fear. We're not near fear, but we're not crazy bullish either. Again, a lot of indecisiveness going on there. Um, it's actually, I'd rather see a flush like this to say, okay, it's time. The bottom's in. We're not seeing that. All right. So that makes me a little, nervous there myself. Value line geometric index holding up beautifully, right? Looks a lot like the SPX, I'm sorry, RSP, I should say, the equal weight SPX, but it broke out. It's holding up fine. It's above the 23-day EMA. Everything looks great there. Nothing to worry about. MFI, which is a percent of stocks above the 50-day moving average. Yeah, I mean it's okay. It's not like, oh, it's not frothy, right? But it's not furious. It's just in between someplace. Are people flocking to gold, right? No, they're not. Gold is underperforming the S&P. This is the ratio, gold to S&P. I was watching this for a while. Is this going to be some kind of inverse head and shoulder? Nope, it's not. This ratio chart is breaking down. Again, people are not flocking to gold. So what does this all mean? So the way I am reading this is that people are still concerned. There's no capitulation. They don't know what to do. There's some complacency. They're holding on to the longs, expecting a V-like rebound. I think that there is a chance that tech continues to get hit while the rest of the market does fine, and under the surface there's a continued rotation into what people would consider more valued area, whether it's run by the 10-year yield or not, or whatever causes it, doesn't really matter. But if you're in names that are getting hit, um, you know, Fastly, whatever, we don't know that this is going to stop. I'm making, I haven't even looked at these. I'm just kind of making up. Look at Datadog. I mean, Datadog went from 118 to 82. It got hit. TTD, TTD went from, 900 to 650. I mean, these are big moves. So I think that there is a chance that there's continued weakness in the technology and growth names. I don't like the way that SMH looks at all, but I think we kind of know our levels now, right? I think that this is definitely a level to be respected. We'll call it 297, right? So that's only 1% away from where we're at right now. So if it closes below 297, I think that, the next set of levels will be, these fib retracement areas. And it's not perfect, but we'll call it, maybe 269, 270, somewhere around there. And I would look at, 280 and 270 would be the areas I'd be looking at if this level breaks. So again, I hope it's not. I still have some longs on. I got hit this week too, with everybody else. So that's not fun, but it is what it is. I think in this time also, I think it's really important that we revamp and relook at our trading rules and how we reacted to them. Did we adhere to them? Did we say, did we not adhere to them? If we didn't adhere to them, why? We got to make our emotional intelligence a little bit stronger, or update our trading rules to where we are with our emotional intelligence to make sure that we are making sure that we are abiding by them. I mean, that's kind of what I'm doing this weekend. I'm revamping my trading rules. I'm looking at them. I'm deciding, okay, what did I do right? What did I do wrong with my trades? As you can see, I'm only using the 23-day exponential moving average on my charts now. So I think that is something I may start doing going forward, and as part of my revamp of my rules, to be determined. But again, we don't know the future, but just be careful if this level breaks and you have a lot of growth stocks. Again, but there's things that are working wonderfully, right? We know banks are working. We know that, some like Carnival Cruise Lines, right? It's been an uptrend. We know energy names like here's what I'm in. I'm in this one right now here. It's working, right? It broke out with huge volume on Friday. So there are things that are working too. So we have to know where the money is flowing to. That's not always going to be hyper growth tech. So just again, be aware of that. All right. Tomorrow night, Trend Spider asked me on their show Trading Pit. So the recording comes out tomorrow. I did it just a couple days ago, earlier this week. So it's gonna be at 6 p.m. Trend Spider. So let me see if I can find it on here. Sorry, I just retweeted it, so it'll be hopefully not too far away. There it is. Boom. Yep. So 6 p.m. Stock Trading Pit. I'll be on there with Dan Ushman. Robin the Black is also going to be on there, a separate segment. But again, he's a great guy. So don't miss that. Again, it's Sunday night, 6 p.m. on 37. So check that out. And again, I hope you all have a good week. Stay safe out there. Know your levels. Take care.